Final panel of the day. My name is Matthew Quint. I direct here at Columbia Business School a center called the Center on Global Brand Leadership. So basically what we're looking at is what it takes to, gathering, sharing, creating knowledge on what it takes to build a strong brand. I'm really happy to be here for the Blockchain and Bitcoin Innovators panel because I've been fascinated for about the last 18 months in blockchain because it is essentially a brand issue. We view brand from a very broad perspective. It's any thing, person, place, idea, or product or service. So obviously much of the discussion about the future of blockchain really is kind of a brand issue. This technology, which has various different mechanisms, combined with the idea of what this could change, what's myth, what's reality, what's hype, what's really actionable. And I think we've got a great panel here, a mix of blockchain development, application layers on top of it, and a couple of specific use cases in the blockchain space. And really happy because I know blockchain and Bitcoin have not come up at all over the 2 days. So you're very excited to finally get to this topic, I'm sure. So I've got with me, and each one obviously will get their own opportunity to get on stage, but I'll just kind of walk through this way. I've got Dave Albert, who is the Chief Operating Officer of Libra. I've got Sebastian Serrano, who is the founder and CEO of Ripio. I've got Jim Regenor, who's Business Unit Director at, now I just did it, Moog. I got it right, didn't I, Jim?
Yes.
He nods. But he's not selling keyboards, in case that's not clear. And I've got Matthew Spoke, who is the founder and CEO of Nuco. And I think I'm going to start in the order with bringing Matthew up first, because he's on that kind of platform development side, and then we'll kind of move our way through each of them. Great, let's give everyone a round of applause.
Hey everyone. All right, I'm not using slides, so I'm just going to hold this. I think it'll be easier. My name's Matthew Spoke. I'm the founder and CEO of a company called Nuco. I'm down in New York this week for a conference that just wrapped up yesterday called Exponential Finance. That was being hosted by Singularity University, but I'm really glad to be here. I was blown away by how beautiful this campus is when I walked on. So I'll tell you a little bit about what we're doing. Quick background on me. I kind of come from, I think, a little bit of an industry trend of people who used to work on the corporate side of the world and decided to abandon ship and jump into the startup side of the world. So I started my career at Deloitte. I started a blockchain team for Deloitte back in 2014. Left Deloitte early last year to launch Nuco, which is really focused on kind of developing enterprise infrastructure on how do you build these distributed networks. In parallel to that, I've been working very closely in the Ethereum community, and I sit on the board of directors of an organization called the Enterprise Ethereum Alliance. And I know that there's a few folks here from JP Morgan who are also part of the Enterprise Ethereum Alliance, as well as a number of other notable companies, Microsoft, Intel, and others. So, first and foremost, the trend that got me interested in this was the fact that this technology really seemed to be how businesses would have to transform over the course of the next decade. The first premise that I put in front of my CEO when I still worked at Deloitte was that blockchains were going to render auditors irrelevant. And that's what caught their attention. That's what led them to investing in us for 2 years before I left the firm. And then what I realized was it wasn't just blockchains are going to render auditors irrelevant. It was blockchains could potentially render a lot of people irrelevant. But how do you bridge this gap between what was going on in the Bitcoin community at the time, what eventually became Ethereum, and what were the requirements of these large businesses? So, the reason I got involved in helping launch the Enterprise Ethereum Alliance was exactly that. How do you take the best parts of this technology and adapt them so that we can deploy these as enterprise infrastructures and enterprise systems? So, you probably hear a lot about different enterprise companies in this space, and I think there's, one thing that's particularly key to notice is, we were talking about this earlier in the hall, there's the concept of public blockchains that really rely on this new model of crypto economics, and then you've got this concept of private blockchains, which to a cynic just look like kind of a better coordinated version of a distributed database. And we've kind of operated on this two-sided spectrum for the course of the last few years, and where we're particularly focused is actually kind of the middle ground. We think it's perfectly appropriate that industries and organizations may want to coordinate with regulatory involvement with their counterparties across transactions within private networks, but not to assume that that means that they're not going to be participating in public infrastructures at some point in the very near future. And I think that's really starting to take hold. Where 2 years ago, if you asked a bank or a large institution about cryptocurrencies, they probably got terrified, where today it's really coming back in force as a real trend that they need to pay attention to. If you've been following the token and currency markets, yesterday I think we crossed the $100 billion mark as total market cap. Probably within the year, we'll be approaching $500 billion. So it's hard to ignore this trend. And what we're noticing is that what we used to say, the criticism we used to have of companies was, well, you operate in silos, and you operate in silos, therefore you bring in intermediaries to connect your silos. And in the blockchain industry, the enterprise blockchain industry, the irony is that we're kind of creating a completely new kind of silo. We're just creating industry silos. We're saying, hey, let's create a trade finance network, and let's create a healthcare network, and a currency exchange network, and some sort of commodities network. But all of a sudden, if I want to leave that network, if I want my commodity deal to get traded for a currency, then I have to go one network to another, and I've created kind of network silos that need to be solved, because isolated networks don't really solve this long-term goal. So big focus of ours at Nuco is obviously deploying these networks for industry. We're in the midst of a really large-scale project right now with the Toronto Stock Exchange, helping them rebuild their commodity settlement system, running it in parallel to their real system for now, looking at how do we integrate it as a real system by the beginning of 2018. But what's more important than, hey, how do we just make a slightly more efficient settlement system, is how can we actually eliminate a lot of the processes that they do today? And they're capturing this not so much as a disruption, but potentially an opportunity, because from an exchange's perspective, what they do today is they operate very domestically, right? They operate in a country or geography around a particular type of asset class, and they don't have a lot of reach outside of that geography for the most part, because they're dealing with physical assets. So the moment that we can create systems where we digitize these asset classes, real asset classes, commodities, equities, derivatives, and we allow them to flow freely across borders, all of a sudden a domestic exchange can automatically become globally relevant. And I think that's where the opportunity comes on the tail end of this disruption. Is, the analogy we've been working on at the Toronto Stock Exchange to get their executive bought in was the fact that, not too long ago, the Wall Street Journal was a New York newspaper. The Wall Street Journal today is a global newspaper, and that had everything to do with the fact that the internet gave them reach beyond what they had previously. And we think in the asset space, the same thing's going to happen. You're going to see assets that traditionally had to operate within a specific economy, within a specific geography, all of a sudden flowing freely across the world. I was at Consensus, which is the big blockchain conference here in New York 2 weeks ago, and speaking with somebody, they said the funniest thing that really kind of captured what I'm talking about. They said, I'll know that blockchains are going to have reached their potential when I can buy a car with sheep. And the idea just had to do with the fact that assets were going towards digital, and that meant we were returning to a barter system, but a barter system of liquidity, and a barter system where I could trade directly with somebody, and I could own a percentage of a sheep, and I could own a stock in Facebook, and I could own a percentage of your house, and I could use that as my liquidity to interact with the world. So, we're building kind of the back-end system that allows you to deploy these networks, connect these networks, and eventually plug these networks into public infrastructures. So that's a little bit about us. I'll pass it on to the next panelist, and I'll answer questions later. Thank you.
Excellent. Thanks, Matt. David.
Hello. Hi, everybody. Happy Friday. It's finally a beautiful day in New York, so I'm glad everybody stuck around to hear probably the best panel discussion of the entire 2 days.
Yeah.
No doubt about it, right? So my name is Dave Elbert. I'm the Chief Operating Officer for a blockchain technology startup called Libra. And as you can see on the board, Libra is the automated risk, compliance, and tax solution for blockchain technologies. But before I go into that, just a couple seconds on me. Like Matthew, I came from industry and moved into blockchain startup land. I had spent the prior 17 years with a large global bank, Bank of New York Mellon. Prior to that, other industry experience. So I don't know, about 2.5 years ago or so, I kind of got caught bit by the Bitcoin bug. And then Bitcoin kind of turned into blockchain, and I really got fascinated by it, and just felt a need to kind of jump out of the large bureaucratic banks and into a small startup and try to figure this blockchain thing out. So It's a little bit about me. So what is Libra? So what we are is, Matthew just said that those guys kind of create the back end infrastructure from a blockchain perspective. What we do is we are a business application suite that sits on top of blockchains and things called smart contracts. So we sit a little higher up in the stack. And as you can see from this slide, we focus on a lot of the unsexy things, audit, risk, tax, accounting types of things, as well as, providing basic business management consoles and tools and new tools to think about new ways to provide their products and services to their clients because of blockchain technology. We believe that we're filling a major gap in the marketplace, and I will say that right now we do a lot of things, but our major focus right now is audit. And I know that Matthew just said that they have a thesis where when he worked at Deloitte that audit is potentially going to be made irrelevant, and it will be disrupted. That's for sure. Our thesis is it's going to be a lot of time before it gets to that point where it is.
Deloitte's perspective.
That was yours. Okay, I'm sorry. I didn't mean to say that, but Matthew's, and we share a similar perspective. We just think there's going to be a long time before it gets there. So we're really focused on, building some next generation audit software solutions based on blockchain technology and for blockchain technology. Let me say it that way. Why Libra? A perspective is blockchains in and of themselves are not end-to-end solutions for a business problem. They're part of the solution. So when you think about a typical blockchain stack that gets implemented today for a business solution, you have something called the blockchain protocol and consensus mechanism, which is kind of like the back end of it. Or if you think of a stack from the bottom up, maybe the bottom on a stack, then you may have a smart contract layer. You may or may not have a smart contract layer that sits on top of that, and you're kind of creeping into the business application layer when you talk about smart contracts. And then sitting on top of that, you have other business applications like identity, things that we do from a reporting, analytics, and audit perspective, and just a lot of different things. And then you have a stack that you can lay out for your customers. So what we think is that blockchains, for us, we're blockchain agnostic. So any blockchain protocol, digital asset, use case, or industry, we think that we would like to be able to plug into and work with. And then, the other thing is, because blockchains are an immutable real-time data source, if you think about audit and a little bit about why audit, we're thinking about it today. Audits are done kind of backward-looking in a forensic basis. People run around, teams of people running around, recent college grads or whatever, and pulling pieces of paper out of filing cabinets, and they're taking statistics samples of something, of a population. And it's kind of backwards looking. It's things that happened, 90 days ago, a year and a half ago. So, between that event happening a year and a half ago and it happening today, there's a lot of risk. And so you can really de-risk business processes if you can get them as close to near real-time or real-time as possible. And we believe that blockchains actually help that, and they actually provide the means for something called real-time continuous auditing. And you just eliminate risk altogether, quite frankly, by doing that. So here's a couple slides on, basically how Libra would redefine audit, but I'm just going to pass over those real quickly right now. From a technology perspective, where we see ourselves, if you take a look at the bottom of the slide, this is a raw blockchain data. You see a bunch of nodes on the network that Matthew was speaking about, and to the right of that is just some alphanumerics. It's a bunch of gobbledygook, and that's kind of what exists on a blockchain today. So what we want to do is we want to take that network of nodes and computers that have a bunch of gobbledygook on it that's not really human readable and usable. And what we want to do is to take that, translate it into something that a business manager, a non-technical business person actually can use in their jobs on a daily basis. So we take it from the blockchain, we pull it up into our technology called Libra Enterprise in the middle there. We normalize it we stage it, we enrich it with business logic and metadata, and then what we can do is pump it back into an enterprise or a client through our API and into their ERPs. So here's actually the 3 layers to our technology stack. The first is the integration layer at the bottom, and you can see it sitting on top of the blockchain protocol. And we source data from blockchains as well as other external data sources, so it doesn't just have to be a blockchain. We have a library of connectors that connect into the blockchain, pull data into our environment. You can think of this maybe as a middleware or an ETL from this perspective. We pull it into our environment. So a blockchain is a distributed ledger, or a type of a distributed database system. They're new data structures, and they don't work well, and they don't talk to today's enterprise software at all. So you have to kind of build the connectors from the enterprise into the blockchain, which is what we do. And then we have an interaction layer, which is a tool set of 8 core features that lets non-technical business users interact with that data to do their jobs on a daily basis. And it could be the same old job they're doing, maybe in a more efficient or productive way, or it can be a new product or service that they're working with, or something that was completely reimagined because of what blockchain technology lets them do. And then the interface layer on top is, we have a GUI, you can use our interface, or we have an API that you can access. Just real quickly, a very quick kind of use case here for just one thing that we're doing. If you take a look in the middle, again, you'll see a blockchain network, the dots with all the lines, and there's a blockchain network with all the circles or nodes running on that network. And what we are imagining is, Libra creating things called audit nodes and regulatory nodes for an auditor or an audit function or an audit-like function and a regulatory-like function to actually be able to be running a node that's purpose-built for them and what their needs are for the activity running on that blockchain, based on a user profile for them and specific business logic and domain expertise that they need. So that's really kind of a lot of what we're working on right now, especially from an audit perspective, is building out this audit node service. Oops, I'm going the wrong way. Just a little bit about our business model. We're working direct, Libra, working direct to customers, selling direct to customers, and we're also working with consultants. By working through consultants, you have instant access to some of the largest corporations across the globe. And right now in blockchain land, really those are the people that are taking the time to invest time, money, resources in the blockchain. It's really the large global banks, health insurance agencies, other FIs, capital markets players, exchanges. So it's really like at the top of the food chain right now from an enterprise perspective that is taking a look at blockchain from an enterprise perspective. The small and medium-sized enterprises and businesses aren't there yet. So we're looking to partner with large consulting firms to give access to those markets. A couple of highlights of things that we have in play right now and engagements that we're working on. Working with a very large global exchange. And when I say exchange, I'm not talking a crypto exchange or a Bitcoin exchange. These are traditional stock market exchanges, commodities, whatever you like to think of it like, but traditional assets today. We're working with 2 large global banks right now. A couple of them are payment. 2 of them actually are payment rails. So from an international money transfer perspective or a remittance perspective, it's spinning up a blockchain to move money and cut out the middlemen. So we're working on right now with a large European bank to move money from the UK to India in a much more timely and efficient manner. My contact information is right there, and please feel free to reach out to me anytime after the presentation. And thank you very much.
Great. Thanks, David. Sebastian.
How'd I do on time? No, you're great.
should say Ripio in the title. Ripio. Startups.
Don't have anything with Ripio.
Okay.
Can I email it to you or something? I have it.
Is that, no. Okay, while you send it,
Sure.
I will
Yeah,
start.
you're, okay.
Okay, so we'll start without the slides, and if we have it, we'll continue. Okay, I'm gonna be the Bitcoin guy. The rest have all talk about blockchain. I will continue to talk about blockchain, but so I'm gonna be. We are very old startup. I'm from Argentina, and we started in 2013, and the reason that we start on the company was because we found that Bitcoin could be a very good thing for our economy and for our countries. I don't know if you know it, but in South America and emerging markets, more than 70% of the population doesn't have bank accounts or formal or semi-formal access to financial services. And we have a history of very bad currencies and a lot of government mismanagement on the control of the currencies. Currently, for example, Argentina has low inflation, which is 25%, and last year was 45%. I am in my 30s, and I see the currency collapse 3 times. So it went to 0 3 times in my life. Almost every 10 years, there is a major financial crisis that destroys all value of the currency. So in that sense, Bitcoin makes a good case for a store of value and a payment system. We kind of started on this and seeing like this is, I have a tech background. And when I started to get into Bitcoin, it was, wow, this is like the internet again. But the internet was for knowledge and for communications and allowing everyone to be able to contact or communicate or get information from anyone in the world. But this network is going to allow to people be able to transact worldwide. And we have slides. Okay. Awesome. Okay. Cool. So now we have slides. That's kind of like what I was talking about, the situation on what percent is unbanked on the population. And this has a huge impact on many aspects. One is, for example, in the US, more than 11% of the retail is online. And if you take groceries, it goes like 20%. And across Latin America, it's only 1.5%. So it's a tenth of when we have similar numbers on people that is online, the share of the online economy is a lot smaller. So when we launched Ripio, the idea was to use the blockchain and Bitcoin technology to offer a better way to pay online, to an alternative to a store value, and a way to transact. So our app our service is mostly an application. You can use it on the web, but most of our users install an app on their phone. Right now, in these countries, there is a huge penetration of smartphones. There are more than 2 lines per person in Argentina, which is our main market. And if you go to any stores and you want to buy a phone right now, the only things are on the shelf are smartphones. So it makes a good platform to start banking the population. So since we started, we built a huge network and integrations with partners to have locations where you can load the wallet with cash. So a user will search which one, if there is a convenience store or a place where they could pay their utilities that is nearby to them. We have thousands of locations. Usually it's like 2 blocks away. And they will go into one of these stores with a number, which is kind of like a phone number, and they will give cash to the clerk, and they immediately will get credit that money in their account. So one of the use cases that we see being used a lot is we have a lot of young users. They are 18 to 25. They don't have a bank account. They never step into a bank. But they, for example, want to play games online. So if they want to buy Counter-Strike or Grand Theft Auto, they go to Steam, and which is the largest marketplace, and the options for paying is Visa, MasterCard, American Express. But there is an option which is Bitcoin. And you can be totally unbanked and have no credit card, but you can have this option as a way of paying. So the user pull out the phone, they scan the QR code, or they click on the link for paying, and we will quote that into pesos that they have loaded in the wallet, and we will pay the merchant in Bitcoin, and that will be completely out of the current financial system. So this is mostly what we have been working so far, building that basic infrastructure for the Bitcoin economy, which is having an exchange, having a wallet, have payment processing services for merchants. And on top of this, we will start building more advanced or more value-added financial services. And the one that we launched recently that we are starting to, which is still in beta, but we are getting ready to scale it more, is to be able to pay in installments. As we are learning a lot about our users and how they transact, what they pay, how often they load their wallet, from information of the phone, we are starting to find ways to score them and to build a credit score for them. So with this, they will be able to buy in installments and finance their payments. So that's kind of like a glimpse on what we are building on top of this. And I think I'm on time with this.
Yeah.
And thank you.
Great. All right. Excellent. Thank you, Sebastian. All right. Close us out, Jim.
I'm really encouraged that all of you are still here. Must mean that the booze that they're going to serve afterwards is really, really good. Or the desserts were really, really good. So, good afternoon. I'm Jim Regenor from Moog. Moog is a large industrial company. We make precision actuation systems, mostly for aircraft. We have a space and defense business and a medical business and an industrial business also. But when performance matters in actuation, so that airplane you're flying on, for it to be able to steer and move, we make the flight control parts. Our journey into blockchain is a little bit different. Our use case is a little bit different. And really what I'm going to talk about today represents the company's journey into kind of the Industry 4.0 space. But what we did was back in November 2015, we bought a 3D print company where we print 3D metal parts. We'd been printing before at our facility at Moog, and we bought a production facility. And when we printed these parts, we decided, hey, this is kind of the initiation of our journey into the digital space, into Industry 4.0. We have some other things going on in the company. Well, in my part of the business, I work with the government, and I work with the large Air Force and Navy depots that repair the large aircraft fleets. And what I do is I go down there and I try to sell them parts that are made with additive to manage obsolescence and those sorts of things, diminish suppliers, that type of thing. But what I found out very quickly was it's not good enough just to be able to make a part. You have to be able to find a way to get a part to where the part's needed. I spent 25 years in the Air Force as a pilot, so I've been stuck all over the globe waiting for parts and pieces to fix airplanes that I've been flying. So what we did was we used a tool called scenario-based planning. We put together a scenario, and it was really simple. You're in the Indian Ocean, you're on an aircraft carrier, you got an F-18 there that has to fly a critical mission, it needs a part, and there's a 3D printer on board. How can Moog send a part out to that aircraft, the artisan take it off of the printer, authenticate that it's really a Moog part, and then look at it and make sure that it was built the way that it was supposed to be built before they sign the forms, and then put it on the aircraft, and the aircraft can go fly. So we're staying on the carrier thinking backwards. We use this right-to-left type of methodology. We said, what gaps are missing? What do we need to fill? And very quickly, it dawned on us that the gap missing was trust. So when I flew airplanes before, you'd walk out to an airplane, there's a set of forms with it, there could be repairs, inspections that took place, but all as a pilot I would ever do is open up the cover and make sure that the forms were signed in the right place and dated. That was it. I didn't pull open covers or look. So we said we need to come up with some sort of trust mechanism that allows the person that's about to put the part on the airplane to sign that 781, so to speak, and then the folks would feel comfortable, the pilot would feel comfortable getting the airplane and fly. So we looked at a lot of different systems. We looked at some token systems. We looked at a couple other ways to come up with that trust element. And very quickly, we decided that blockchain was really going to be the answer. So we mixed blockchain and 3D printing. So we made this cocktail of innovation between blockchain and 3D printing. And what we realized as we mixed the cocktail was blockchain and 3D printing were enablers to something much larger. And that much larger thing is a point of use, time of need supply chain. So we're using blockchain now. We're leveraging blockchain additive manufacturing to be able to take the non-value added steps out of supply chain. So you could be an aircraft manufacturer or an aircraft user. You could be Lufthansa, and you buy a part in Frankfurt, and you got a plane that's broke in Auckland, New Zealand. So they buy a digital part from us via the blockchain. They have provenance. They're able to send that part, the digital file, down to Auckland, and they're able to print a part there, put it on the airplane, sign the form, the plane could go fly. So all of a sudden, those second and third order effects are what the value add is to the customer. No more transportation costs, no more warehousing costs, customs brokerage, and time. You can do it very quickly. Now, a metal printed part takes several hours to a day or so, and there's some post-processing. But today, with a polymer part, you can send it very quickly, print the part very quickly, and then put it on the aircraft. So you create this environment that allows for this point of need, time of use type of setup. What that then enables is new business models to be developed. So out of that, we've developed several new business models that we're able to bring that to market. And it's exciting for the company in so much as we're a kind of a large industrial company, and one of the speakers earlier said, you got to take something that's not part of your core outside of the company in order to develop it. So the challenge we've had is trying to convince the company, the mothership, to use the analogy that was used earlier, we're the pirate ship. We've tried to convince them not to eat us, as was said, but it's a difficult task. What does the system look like? Some of the questions we were asked is, it'll be a permission-based system. So it's going to be distributed ledger, permission-based. When you think of the government, they're not too they're not able to kind of leave it in open architecture. We're going to ride on Hyperledger, at least for the point or the proof of concept that we're doing right now. And then we're also doing one for one of the large commercial airframers. Half of our business at Moog is commercial aviation. The other half is military aviation on the aviation side. So we have two proof of concepts, one in each space, utilizing the attributes of blockchain and additive manufacture to then create that point of use time of need. The other piece is we're going to create an environment where smart contracting is going to come into play. So just think about if you could buy aircraft parts, IP, on some sort of platform base. So think of Netflix, right? So now I'm going to sell digital supply items, and my customer is going to decide where to turn that digital item into the physical space, into that physical item, right? He's going to buy something that's digital rights managed, and he's going to be able to access that and then send those parts to where he needs the parts. So that's what blockchain does for us. The reason it works is in the aircraft industry, the FAA and the EASA over in Europe require part provenance today. So part provenance happens today. It's just paper. So we can make this part in a couple of days or a couple of hours, but it'll take us a couple weeks to put together the paper. So the blockchain and the additive allows us to synchronize up those processes and meet the regulatory requirements of the FAA in order to provide part provenance as we ship a part. That's required. So all these kind of come together in this hyperglot cocktail, so to speak, and it create this big explosion of this new model of a supply chain, digital supply chain. And with that, I'll pause and wait for questions. That's it.
Perfect. Excellent. Yeah, that was great. So thank you all, and I think really interesting balance we're seeing from bottom of the stack to very specific use cases and unique use cases, getting close to this level of sheep buying cars, right? We're getting into this level of the physical objects using blockchain and creating an ability for that trusted information to occur. So I'm going to Obviously, I want you guys to be able to ask, your questions. But while you're thinking of your questions, maybe I'll just kick a basic one off to the panel. And we heard a little bit about this, but I don't think clearly from necessarily everyone, which is, really get into what you're finding is either your biggest or one of your biggest challenges with what you're trying to implement it. Is it a regulatory challenge? Is it awareness? Is it partnerships? Where are you seeing that? And I guess, we'll start with you, Dave.
Thanks. Yeah. Is this on? Okay.
Yeah.
So for us, one of the biggest challenges we see is that for the most part today, there aren't a lot of blockchain type systems or networks actually put into production. You see some kind of out in the press, and every once in a while you'll see somebody announce something, but what we see is they're more kind of pilots and real production systems, but things are slowly getting into production. What we've noticed by talking with a lot of people in the industry is actually there's a lot more going on behind closed doors that don't get announced publicly. So the tip of the iceberg is maybe things that get announced publicly, but there's actually a lot of stuff going on in the labs that aren't announced. But with that being said, for the most part, what we see is blockchain experimentation and innovation taking place in enterprises in the technology labs. So, most large enterprises that we talk to, large banks, large FIs, they have a strategy and innovation group or an innovation team. Oftentimes, they're actually part of the IT organization or a combination of the strategy group and IT organization. And these things are all getting spun up by, the IT guys and the strategy guys and not the business guys. And at the end of the day, at a large enterprise, there's a business person that's going to have to own the process that blockchain is used for. And they have a P&L, and they're accountable for their clients and all that kind of stuff. So for us, the biggest thing that we see is, propagation of blockchain solutions out of the experimental labs and actually into the businesses. And that will kind of spur adoption and maturity of the product. So for us, there's money kind of going into it, but if you think that, this is a company's IT budget, the blockchain piece is, my fingers are almost touching. So in order to get a bigger chunk of that IT budget, you have to get adoption out of the lab and into the businesses. So that's a challenge that we're seeing.
Great. Yeah, the ecosystem isn't there yet for your application layers to be built on top of.
For sure.
Sebastian, go ahead.
Being a Bitcoin company purely has been always challenging to partner with traditional financial institutions, like banks, for example, which are, as it is new and there is no clear regulation. Now it's starting to be, but it was always very difficult to work through these partnerships. Now it's opening up. It's not such a new world, and it's getting easier, but it's always been challenging that part. But
Great.
That,
Yeah. Jim, you mentioned a few, but I'm sure you've got something else to say on the point. Yeah.
Yeah, so for us, is this on? Okay. For us, it's more of an internal entrepreneur or an internal startup within the company because it's not part of our core business. So I'll echo what Dave said. You got to have a business guy involved from the get-go for these to work, especially in that environment. I'm the business guy. My chief technologist or my partner in crime is one of our principal engineers, George Small. But there's four of us that got together and wrote a patent for this process, and then out of that we started building. First day was the business canvas, because you got to go and you got to be able to lobby for the funding, right? And if you don't have a business canvas and you can't tell the company how you're going to make money, they're not going to give you money, right? So you got to be able to figure that out from the get-go. Internally, and the same holds true, I imagine, externally if you're a startup, right? You're not going to jump into that, put all that. All your time and sweat equity, and if you don't have an idea of how you're going to make money at the end. And I'll pause.
I think one of the challenges, I'm pretty focused on like the large scale enterprise B2B market, and I think one of the challenges with transformative technologies like this is when companies try to apply them incrementally. And in that, there's this model now where people are trying to figure out how to use blockchains to find that 5% efficiency improvement in their business. And that's fine. I mean, there's nothing wrong with that. There's a lot of companies getting built around that kind of 5% efficiency. And I think we'll see a lot of adoption in the 5% efficiency curve. But what what I think is not getting noted enough is that this is transformative, and this is going to not only allow you to process your traditional business process more efficiently, it's going to change your traditional business process. And for organizations to come to that conclusion, I think it's starting to happen. You know, I can speak specifically about my client at the Toronto Stock Exchange. You know, a year and a half ago, starting those conversations, you weren't talking about cryptocurrencies, but now the entire exchange is focused on that market because they're seeing that it might not be that long before the cryptocurrency market is bigger than their own market. And now they have to start thinking differently. And I think that's going to be a big challenge for a lot of organizations is if you get into this process of, hey, I want to apply this technology to incrementally improve, you know, how I trade data with my other business units, I don't think there's enough of these types of use cases that, you know, that Jim's talking about at Moog. These are like game-changing, transformative use cases. Most are saying, well, you know, right now I fax papers to the other department at the other bank, and now I want to like blockchain those papers over instead of faxing them. It's kind of a boring application of a transformative technology, and I think it's a mindset challenge still right now.
Can I just real quick, Kevin?
Yeah, go ahead,
So
Jim.
Dave,
Yeah.
what you said, I think you hit a very salient point when you're talking about audits. And you know, in the aircraft business, our supply chain's audited, our contracts are audited by the government, by the suppliers on the commercial side, and so on and so forth. So when you're putting things out in blockchain, you are going to negate some of that. Not all of it's going to go away, but you're going to negate some of that. So when you think of blockchain, back to Matthew's point, don't think about the primary effect. Think about what I can leverage in the second and third order effects that bring value to my customer, because we quickly realize additive manufacturing will be commoditized. So what we want to do is say, what are the second and third order effects that additive manufacturing is an enabler for? So view the problem statement like that. Don't view the primary effect, but peel back the onion a little bit more and see what else is there for you for value.
Great. All great challenges and universal in many ways, which is always so interesting. Let me go ahead and see anyone in the. Oh, great. Okay. Perfect. Go ahead.
Bob. Yes.
Yep.
Okay. Bobby Corona. I'm working on a few blockchain initiatives myself. And David, you had said, I think Matt, you as well, that a lot of organizations are doing POCs and pilots at the moment. And it seems like 2016, 2017 are the years of POC pilot programs. Do you agree with the fact that by 2018 you will have some adoption and into 2020 more aggressive adoption curve to really accelerate the benefits of blockchain, that we agree that it is a transformative technology and it's being driven by business and a lot of enterprise use cases, and even if those use cases being 5% actually go in production? Do you agree with the fact that by 2018 and beyond, maybe perhaps 2020, we'll have more aggressive, adoption where we can leverage this technology and within enterprise settings?
Yeah, I think I think it's natural the way businesses are starting, right? And I used to work at Deloitte, and there's this strategy that Deloitte often talks about with their customers in the management consulting practice about zoom out and zoom in. And zoom out and zoom in was like, hey, zoom out to 10 years, ask the simple question, is your business going to look the same in 10 years? Maybe 20 years. The timeline will change industry by industry. And if the simple answer is no, my business is not going to look the same in 10 years or 20 years, then zoom back in and figure out what do you need to do in the next 6 months. And a lot of businesses, and what blockchains aside, you look at, you zoom out in the automotive industry and you realize cars will not run on gas in 10 years. So you zoom in, you figure out, what do I do about that today, right? So proof of concepts is a natural place to start. I think we're starting to see the beginning of some of those tipping into production. Not the problem, but the reality is that most of these tipping into production are somewhat kind of mundane, boring use cases, right? But there are massive, ambitious projects around the world. Like one that particularly jumps out at us that we're spending a lot of time on is the government of Dubai saying that every single one of their processes will be on a blockchain by 2021. Every government process in Dubai. And then their goal is to use that as a catalyst to make sure that all of industry in Dubai is running on top of blockchain systems by 2021, financial services, insurance, et cetera. So, a push like that isn't happening everywhere, but I think you're going to see that the dominoes start falling pretty quickly.
Yeah, I mean, I tend to agree with that perspective for sure. Relatively speaking, right? So, so blockchains aren't meant for everything. They're not going to solve problems for everything. So, if you think about a large enterprise, Jim's company Moog, and or if you're IBM or Goldman Sachs or JP Morgan, not everything at that organization is going to get put on the blockchain. I mean, unless you're Dubai and the king can dictate you do that, right? And in a lot of the Western countries that where you have more of a democratic situation, it's capitalistic driven. Not everything is right for a blockchain, to be honest with you. That's our perspective and my perspective. So you're going to have some things, and it was talked about earlier that the blockchain fits really well in an ecosystem environment where you have networks of participants in an ecosystem or an industry get together. So if you're all in a supply chain, then people in that supply chain ecosystem get together. If you're part of an exchange trading, and post-trade clearing and settlement, maybe those guys form an ecosystem. So you're kind of getting out of enterprise specific and into ecosystem specific. So there's a lot of challenges that have to be kind of overcome besides just the technology factor. It's being able to kind of not just trust the network, but trust working with people who are your competitors today and who might get into your ecosystem and still be your competitor, but they're going to be in your ecosystem on that blockchain. So I think relatively speaking, it's going to follow a traditional curve for technology adoption. That's what we think, maybe a little faster. But yeah, I mean, it's still very young in its in life. I mean, Bitcoin rolled out in 2009. Blockchain didn't really become a thing and it started to separate and become a thing until, really 13, 14, it just started, and it didn't start to get hot until 15 or 16. So I think we're still very young in the cycle. But yes, for sure, production systems over the next 2-3 years, but limited.
We'll add a little bit to that. I think also there is another thing that may be bigger than that blockchains. I'm not sure if we will be talking about blockchains in a few years. Because maybe the most interesting thing about Bitcoin is that it's the first form of programmable money. Like everything is becoming software. The Bitcoin is money becoming software and getting behavior. And with that behavior, like every Bitcoin transaction is a smart contract. And the blockchain is that virtual machine running smart contracts. And we are starting to see many new applications on building apps on top of these blockchains. And then not sure we will be talking too much about the blockchain, which is never, but we'll start talking more about the apps and the networks built on top of it. And there is an explosion about ICOs. Most of it is not gonna work, but I think we're gonna start seeing applications that do work and have enable new business models not previously feasible, and I will be looking at that.
Yeah, Sebastian, I think you're onto it there. So when we look at what the world looks like in the future, we look at the conversion of bits to atoms to happen very near the customer, right? That's going to happen regardless of what you're doing. There's a lot of other projects that are going on with energy, with other types of conversions, but the bits to atoms will convert very near to the customer. The other piece that I think is, this as a service, X as a service is true. It's going to permeate throughout industry. It hasn't yet. So one of the things we offer is manufacturing as a service. But that's being able to answer the questions for you. What parts should I additively manufacture? Not could I, because could I's characterization. Should I is looking at what folks said earlier today is what's the business logic behind it, right? So how do you marry those types of changing business models up in the future? How do you marry up the conversion of atoms or bits to atoms in the future? Blockchain just becomes an enabler. New business models, I think, is what really the end result's going to be. And, you guys will be the ones who develop them. Not old guys like me, but.
Great. Is there another question? Hand up.
Daniel Reis, Central Bank of Brazil. Quick question to Sebastian.
Yeah.
How do you classify your business? Is it a payment scheme or it's a Bitcoin marketplace or exchange?
So our mission has always been build that basic infrastructure. So I got into this because I had like a deja vu with the internet. And when I was in high school, I built a small internet service provider in my hometown. And when I was getting into Bitcoin, it was, wow, this is the internet again, so we need to build infrastructure again. So for the internet was build the internet service provider, build the hosting providers, building the content places. So what's that for Bitcoin and blockchain? So that is building the wallet so that the users can hold Bitcoin, can transact with it, can store it, and have exchanges so they can change it to the local currency and vice versa. And also have, for merchants, the facilities to do payment processing. So we do all that. We are building all that basic infrastructure to enable the access to the network. Because the first thing is to bring access. And you cannot work on building Facebook without people getting into the internet. So that's, that covers kind of like the mission.
Great. Any other? Oh, we got great question back here.
Hi there. My name is Elizabeth Gao. I'm from Columbia Business School. My question is to one of the points Matt made on blockchain, but also to the panel. So you kind of described blockchain could kind of give you ownership on different asset classes and provide diversification and integrate that into the social structure. That reminds me a little bit of subprime mortgages, where you pack different credit ratings and locations of assets into like one security, and that if that fails, we know what happened. But this time, it's going to be at a whole new level. So my question is, what do you think the industry is doing or supposed to be doing to control that kind of risk when it happens? Thanks.
I think the major difference is inherently like the design of the system is built on transparency, right? And I think the problem with the housing crisis that didn't so much hit us in Canada, thank God, but you poor American folks down here, is that there was no transparency, and people were buying something with very little understanding of where the value was coming from. And you go through that story again, and you say, well, what if the underlying assets of these securities had properly been tracked and traced in a transparent manner? And I think you may have found that was an avoidable problem, because when people started realizing that the mortgages backing their securities were people were defaulting on them, nobody could actually point to which house was inside this security, or which groups of houses, which groups of mortgages. And I think that's why this technology is so impactful. And for sure there will be financial instruments that get developed on top of blockchain currencies and blockchain tokens. But core to this will be the fact that somebody will always be able to hold you to account, because you can see right through the origin of the value. And I think that's going to make a big difference, and hopefully make that type of scenario less likely. I don't think it's impossible, but less likely.
Yeah, just a perspective of mine is I think that blockchains and distributed ledger technology in general are a regulator's dream. I mean, it's to Matt's point, it really brings a degree of transparency to processes today that are covered in layers and of different other processes and probably built by design that you really can't see what's going on underneath the covers, and it definitely allows you to have that transparency so you can see what's going on under the covers. Now, I mean, that's with, so think of a blockchain as just the infrastructure that these things kind of run on top of. And you can digitize, basically digitize any asset, like, we said sheep earlier or whatever, and put a digital representation of a physical object on a blockchain. But you're always going to have insight into, that asset, where it's at, who has it, who created it, at any point in time, what happened to it. Whereas today you can't. But if we're talking cryptocurrencies, you're not going to have probably cryptocurrencies on maybe public blockchains. You're probably not going to have the same, in my mind, this is my opinion, the same degree of transparency as to that asset, and is it something that maybe an investor will buy and hope that the price goes up and they're not going to get burned, and then the crypto crashes and they lose all their money. Who knows? There's certainly talk of an ICO bubble these days. There's a lot of coin offerings going on. I think I just read, was it this morning in the CoinDesk Daily, that they came out with their research that said the first half of this year, ICOs outpaced traditional venture capital for fundraising in this space, and that was kind of an eye opener. And I'm in the space, so I keep an eye on the crypto market, and it's really kind of cool. But I have, so when people like my father, or like a friend of mine in San Francisco when I used to live there, who was a doctor and just not very up on these things, she doesn't even know what a stock is, let alone a Bitcoin, texted me 2 days ago and said, Dave, hey, we just had a baby, and I'm thinking about putting some money away for my baby. Should I invest in Bitcoin or Ether? And I'm like, when just your aunt and uncle start asking you, should I invest in a cryptocurrency? Yeah, it might be kind of bubble territory. And I only say this because, getting back to your part of your question about the subprime, mortgage industry and those types of assets, from that perspective, you may still have some of that. So,
great. I see that we are at our time end here, so let's give a big round of applause to all our panelists once again. Great. It was great to be there, and I assume my man here, Leon, is who I'm passing off to. Great. Excellent.
Thank you, Matt, and the blockchain panel. I'm glad everybody stayed for that. It was very worthwhile, hot topic, and certainly lived up to promise. So I'm not going to stop you talk too long, because I know you want to go to drinks, possibly go home as well. It's been a long 2 days. Thank you so much for staying this late. Thank you for those on the live stream who are watching, and I hope you enjoyed it. Come back next year. We love having you, and thank for the compelling questions. And to the crew who put this together, thank you so much, Mike, Jason, Corey, Ellie. Thank you so much for all your hard work. It's actually quite a bit of work putting this whole thing together, but you can see it's been very worthwhile. So that's it. Off to drinks, and see you next year.